All right, what's up, guys? Welcome back to J&J Futures. Today we are talking about discount, premium, and OTE, which is optimal trade entry. So what is that? Good question. Here we are on the charts. I'm using the Lux Algo Smart Money Concepts indicator, and this has so many tools. This is a really good indicator for beginners on TradingView. And by the way, if you want to use it, indicators, and then look up Smart Money Concepts. SMC Lux Algo. So as you can see, there's three boxes. There's a red one that says premium. There's a gray one that says equilibrium. And there's a green one that says discount. So here we have premium, discount, all these pictures. But what does this mean? So in a range of price, remember how we discussed swing lows and swing highs. So a range would be from one prominent swing low to a prominent swing high. That's a new range that we just formed. And the top of the range is called the premium, whereas the bottom of the range is called discount. And then, of course, you may know this from high school science or, anything like that. The middle, or the part where everything is even, is called the equilibrium. So first, let's talk about premium and discount. In premium, you are typically looking to short the market because in that range you're in the higher price point of the range, which means there's a better chance of price being overbought, meaning that we're a little too high for the range right now and we need to go back to equilibrium to correct itself. And then the same goes for discount. Discount means that you're looking for buying opportunities to buy to the equilibrium or past it because price is a little underbought right now in that range. So let's go to the charts here on NQ. And as you can see, discount to premium, there's this huge range. And we're going to get out a tool that's called the Fibonacci retracement tool. If you go on TradingView, over here on the side, Fibonacci fib retracement. And we're going to draw from the low of this range to the swing high. So meaning, if you were to look at price, all of this price here, and you look at the most recent thing, remember we're on the 5-minute time frame right now, so if you go on higher time frames, it's going to be a little bit different. The discount is now down here, but really this can work on any range. You don't have to listen to the indicator fully. It depends on what time frame you're trading on. But as you can see right here, using this Fibonacci tool, we line up the discount, the equilibrium, and the premium. So when we're in this range, what we typically are looking for, like I said in premium, is shorts on the market. And then in discount, we're looking for buys. So for example, let's go here and we'll do this range from this high to this low, right? So this is our range right here. And now two key levels on the Fibonacci tool are the 618 to 0.5, all right? And this range is what's known as the equilibrium range. Obviously, the 0.5 is going to be the equilibrium because it's the middle of a 0 to 1 range, right? But 618 is what's called the golden level. And that is called the golden level really just for some reason traders really like shorting or longing at that level. That just seems to be a really popular level. So if we draw out this Fibonacci tool, you usually want to look for trades bouncing off of the equilibrium point, which is where we get into OTE, optimal trade entry, because it is optimal or the best fitting time to enter a trade if it's bouncing off these levels. So as you can see, we have this range, and what happens the first time that we touch the 618 level? The 618 being the top of this box here. As you can see, we touch the 618 level and then immediately drop down all the way to the 0.5, then bounce back up, and then continue in that path until we have enough displacement to get past one of them. So once again, we get to the 618 level and we immediately bounce off of it. That's why the 618 is commonly known as the optimal trade entry. So premium is that overbought zone where you're looking for shorts, and discount is that underbought zone or oversold zone where you're looking for longs, for price to go up. And then you want to at least aim to get them in OTE. So for example, when you take a trade, obviously you have a lot of confluences that go in everything. So, we're looking for an inverse fair value gap, which we've covered. in order to, get a setup, right? So this happens in London. We bounce off the OTE. So now we're like, okay, cool. We're bouncing off OTE. Let's see if we could get an inverse fair value gap. Nothing on 3 minute, nothing on 2 minute, except for this little guy. But let's check if we have something on 1 minute a little closer to the bounce, right? A lot of consolidation here, a lot of consolidation here. So we'll just go with this fair value gap, this big fair value gap here, which basically overlaps with the 2 minute. So, like we said, price and trading is all about combining confluences. So once we inverse this fair value gap, we then look to target some liquidity. Maybe this low, maybe these equal lows, maybe this low. But let's just go for the equal lows because it's a 1.5 risk to reward ratio, and we're usually aiming for anywhere from 1 to 2. You don't want to go for a crazy banger. Obviously, it didn't hit this low, and you may be like, well, why didn't you go for it? Well, it's pretty far away, and that's not some you really want to go for. Plus, we're in London session, so we probably wouldn't even take this trade anyway because it's at 3 in the morning. But this just shows how important OTE is. It's another confluence, and it's another way of telling where price may end up going. So let's go through this one more time real quick. Delete everything. Discount, that oversold zone. Premium is that overbought zone where you're always looking, for shorts or longs. And then this region here, that 618 region, as you can see, we have this range. Price is going to hit that 618 and usually retrace. So since we're going downwards, once we get back up to the 618, we're probably going to get a continuation downwards, which is why price is going down, we come up, and then we continue down. So that's how OTE and equilibrium and discount and premium work.